Okay, so joining us today is Rick Rule, who needs no introduction. Rick, welcome back to the Daily Dive.
Pleasure to be on with you. Thank you for having me back. I enjoy the process.
Okay, so you recently stated in an interview that the Federal Reserve is sending the wrong message to general society. Um, can you give us some light on what you mean by this?
Sure. I think that, how do I phrase this correctly? I think that the Federal Reserve is causing taxpayers, consumers, and investors to confuse liquidity, which we have lots of, with solvency, which I don't think we have, meaning that there's a lot of cash in the system. The problem is that our debts as a society are probably unserviceable. The Fed is determined to maintain artificially low interest rates, which I think is another problem. Artificially low interest rates, first of all, distort the economy by making capital appear to be cheaper than it actually is. But it does something more pernicious. It's a wealth transfer from savers to spenders. Now, in a democracy, that wealth transfer is very popular because there's more spenders in the world than there are savers. But I do think it sends the wrong signal. If society as a whole has too much debt, an unserviceable amount of debt, the idea that you subsidize the debt and you increase the depth of the hole that you have to dig yourself out of, I think it's a very bad message. And I think that's exactly what the Fed and the political class are doing. And I think it's unfortunate.
Now, I don't know if you saw this yesterday, but Justin Trudeau, uh, probably one of his best quotes of all time, said he doesn't think at all about monetary policy. What does that tell us that the prime minister of a major country doesn't think at all about monetary policy?
Well, with the caveat that I'm not in Canada, um, I think, unfortunately, that Mr. Trudeau's feelings, if that's the right phrase, are consistent with that of many voters, which is to say, most people would prefer not to care. Most people would prefer to think that the prime minister's vacuous promises were going to come true. Most people, I think, would prefer to consign their financial future to somebody else rather than do things like save, work, study, and invest. The last time that I'm aware of that the prime minister made a well known public statement about finance, he said the budget will balance itself. So I wouldn't blame him for not thinking about finance because when he does think about finance, he makes horrific mistakes. And he becomes, frankly, less electable. Uh, the political constituencies on both sides of the 49th parallel would prefer to exist in a universe where there was free beer and a free lunch. Uh, Unfortunately, from my point of view, that world is a fantasy.
So you think that what's going to end up happening here is we're just going to see a growing gap between the labor class and the capital class, as in large part the labor class votes against themselves because they don't really understand what's happening. Would that be fair?
I think both classes do. What Trudeau and the other big thinkers, I don't want to make this entirely a Canadian discussion, but what the political class do with regards to subsidizing credit is they make old guys like me more money because we have collateral and we have the ability to access credit.
Mhm.
Uh, Many people, small business people, as an example, have no access to credit. So low interest rates don't benefit them at all. Uh, Working people of age that did the right things through their lives, that saved and invested, are now in a position where they should be coming out of equities and going into bonds. And the bonds pay artificially low interest rates. So the very measures that the big thinkers sort of tout uh, to help the middle class and working class people actually help the investor class. And in that sense, uh, part of the strength of Biden in the United States and Trudeau in Canada is the tacit support of large numbers of fairly cynical financial players who understand that a continuation of artificially low interest rates and a continuation of unequal access to capital benefits them. Now, that both giving through lower interest rates and taking away through higher taxes. but but I suggest that the comment that you made at the outset of the question, which is to say that one group of people continues to get poorer, while richer, while most of society continues to get poorer, will be an ongoing problem. I don't think it's all fiscal policy. I think that people have been trained by society to, as an example, de-emphasize skilled trades, where a young person without incurring any student debt can enter the labor force, as an example, as a plumber or as a handyman, and make $100,000 or $120,000 a year. Mike Rowe famously says there are 6 million jobs, high-paying jobs in the United States that can't be filled because there's a shortage of people who can fill them. The problem that you describe is a many-headed monster. I don't think that the political class or the Fed are doing much to solve the problem, though.
Mhm. Okay, so let's switch gears here and talk about what happened in Afghanistan over the last couple of weeks. Uh, Biden pulls out, says that the Afghani people don't really want to fight the war with the U.S. So, okay, we're just gonna kind of abruptly leave. Um, we're hearing some stuff on media about the Taliban maybe giving a bit of a favorable treatment to, say, China or Russia. Do you think that what's happened here in Afghanistan is going to have any impact on the U.S. as a superpower or the U.S. dollar?
No. I think that the US dollar reigns supreme for other reasons, which is to say the weakness of our major competitors. I don't think that the strength in the US dollar reflects an improvement in the US economy. As Doug Casey says, the US dollar is the prettiest mare at the slaughterhouse, which is to say, as unsettled as the financial condition in the US is, when you look at the competitors, including the yuan, but more probably the euro and the yen, they're in even worse shape than the US dollar. In terms of the US economy, Afghanistan was a sideshow at best. And deciding not to lose another $2 trillion in the next 20 years will probably be good with the United States. In terms of our standing around the world, America's standing around the world, what I hope this does is send a signal both to the political class and to other corrupt third world despots, like the people that ruled Afghanistan for the last 20 years, that the United States has no business and no interest in supporting them. The truth is that uh, we were never engaged in a war in Afghanistan. We were engaged in a politically inspired police action. You may remember, maybe you're too young to remember, but when the United States went into Afghanistan as a consequence, an alleged consequence of them harboring Osama bin Laden, when they had Osama bin Laden pinned down in the Tora Bora cave complex, they could have got him. It probably would have cost 3 or 4,000 American lives to get him, and that would have been politically unpalatable. And pulling out for various reasons was politically unpalatable too. So rather than attempting to win, what we tried to do was avoid embarrassment. And the process of avoiding embarrassment killed tens of thousands of Afghanis, consumed trillions of dollars of American treasure, killed at last count 2,500 American combatants, and seriously wounded over 10,000 more. My hope is that this is a lesson to the United States. The lesson that I hope is that American foreign policy becomes if you uh, are a threat to the territorial integrity of the United States, or if you shelter, harbor, and protect somebody who is a threat to the United States, we will eliminate your ability to govern. and we will eliminate a lot of your infrastructure purely in a punitive sense because you aggressed against us. And then we'll leave and we'll let you build up the rubble. We're not nation builders, particularly we're not nation builders in artificially constructed nations like Afghanistan. Afghanistan was a European construct made up of 8 or 10 different ethnic groups with century-old dislikes for each other. The only thing that united them was that they liked us less. So my hope is that this is a lesson that we learned that we seemed not to have learned in an earlier disaster called Vietnam.
Yeah. Okay. So let's switch gears here to a couple weeks ago, and this is just something that I got to ask you about. There was that flash crash that went on with gold, where I think it was Sunday night. We all kind of looked, and it's whoa, we're under $1,700. Gold drops $100. There are various reports that there was, $500 million of notional contracts traded, up to I think I saw some reports saying $4 billion of notional contracts sold at the open. What do you think happened there?
Well, I guess there's two explanations. It could have been a credit decision. In other words, there could have been some large financial interest that exceeded the capabilities of their credit lines, uh, much like we saw in the big New York hedge fund blow up, 3 or 4 months ago.
Mhm.
Or it could be a financial player that was using the physical market to manipulate the long-term futures market. The idea that somebody could have built a short ladder in the futures markets, and I'm making this up. I'm not saying I
Yep.
know it, but let's say that a financial interest controlled $5 or $6 billion in future short positions, leveraged, and then was able to sell enough physical during a period in time in the market when there wasn't much liquidity in the market to drive down the spot price and as a consequence drive down the whole futures chain is plausible. I'm not trying to say it occurred, but people spoof markets all the time. Uh, Either of those could happen. What's of almost equal interest to me is the fact that that fairly precipitous crash resulted in all of that surplus metal being bought back, which is to say, while that crash was probably unnerving for people who were on margin themselves, a year from now, when you look back on a chart, you won't see it. It was a psychological rather than a financial event.
Yeah, it certainly seems like that. Okay, so how are you thinking about markets right now and positioning your book with everything that's going on, where the Fed seemingly, like you said, put liquidity. We've got the Fed's putting a bunch of cash into the system, and then they now have to take it back via the reverse repo facility because it can't even find a home. How are you thinking about positioning your portfolio as an investor?
This is easily the most interesting time in my career. Interesting, perhaps like the Chinese curse about living in interesting times. Uh, we have a circumstance where the whole market is floated on liquidity. There's too much liquidity, and I have too much liquidity. Cash savings uh, in US dollars absolutely guarantees you a 4.5% compound annual loss in purchasing power. But at the same time, I have to have a lot of cash because I believe that the probability of some confidence shaking event is fairly high. And if a confidence shaking event happens and short term credit markets seize, like they did in 2008, having the cash will give me both the tools and the courage to take advantage of the circumstance rather than being taken advantage of. So I regard the 4.5% annual negative yield on my cash as being an option premium. So the first thing I am is very liquid. I expect volatility to increase. And you can't buy long vol products in financial markets anymore. that's telling you that there are a lot of people that are afraid of returning volatility, like I am. It seems to me that the level of debt and deficits that we have are unsustainable, but also unstoppable. I don't know how that resolves itself. It seems to me like uh, the risks around traditional savings products for most people are very high. Let's look at the arithmetic around the US 10-year Treasury. You make 1.2% a year in a currency whose purchasing power is declining by 4.5% a year. Uh, Franz Pick called that a certificate of guaranteed confiscation. Jim Grant called it return free risk. And I think that you're going to have over time disintermediation out of savings instruments, which is to say, I think these low yields will ultimately bring an end to a 40-year bond bull market. I don't know what that looks like, but I think it's going to be turbulent. I'm not one of these doomsters who sees the extinction of the dollar, the end of the Western world as we know it, or anything like that. I suspect 10 or 15 years from now, the S&P 500 will be trading, at least in nominal terms, but probably in real terms, substantially higher than it is today. But I think it's very likely that sometime between now and then we have a 50 or 60% decline in major equity indexes. I've seen 4 of them thus far in my career, and it would really surprise me at age 68 if I didn't see at least one more before I shed my mortal coil. And so I'd like to be prepared for it. We've lived, well, you in particular, at your age, you've lived through the most benign economic period in the history of mankind. Reversion to mean means simply a reversion to somewhat less pleasant times. It doesn't mean a reversion to bad times if you orient yourself correctly.
Yeah, and it's strange too, and I think about I'm 38 years old, and I think about when I was a kid, my mom got me signed up with a bank account, and she explained to me, okay, you're going to get interest for putting your money in, and then I think about my 4-year-old son Carson, who you can maybe hear in the background here, and never have that conversation with him. At least it seems like I'll never have that conversation with him as a child, which is you set up a bank account so that you could get interest where it's going to pay you back. It just the world seems like it's in a very different place, and it's very hard for young people to kind of understand, you know, how to keep up with inflation, as you put it. The 10 years trading around 125 basis points, 4.1% in inflation. How are young people supposed to keep up uh, today to just stay above water? And I really appreciate you coming on here and trying to help us make sense of that. And
For young people, it isn't the message that they want to hear because young people want to live rich often as opposed to be rich. But the first thing is to save.
mhm,
Um, you absolutely positively have to save. In this environment, you have to be a capitalist. You have to. And in order to be a capitalist, you have to have some capital. Many young people tell me they can't save. I remember when I was a young immigrant to Canada in 1970, uh, when it was possible, I would hitchhike to UBC as opposed to spend a quarter on the bus. I always saved at least 10% pre-tax from every paycheck, meaning I paid myself first. Starbucks, beer with the boys, all that kind of stuff came afterwards. I had a young person tell me a couple of weeks ago, I can't afford my apartment rent. And I said, right, get a roommate. I don't want a roommate. You think your future cares what you want?
mhm. Yeah.
Now, that's a harsh message, but it's a message that's been consistent through 6,000 years of mankind. And the idea that somehow in the year 2021, we're immune to history, immune from having to adjust our standard of living to reflect our means, irrespective of Trudeau or Biden, those decisions are personal, is silly. So the first thing that people have to do is uh, save. The second thing that young people have to do is invest in their own training and education. On both sides of the border, young people want to believe that Biden will make it better, or Trudeau will make it better, or Harper will make it better. The person who makes it better for you is you. Uh, Absolutely, positively has to happen. You make money by providing utility for other people. People often disconnect doing a job with getting paid. If you create a lot of utility for other people, you will be paid for it. Wealth is simply the excess of utility generated relative to the amount of wealth that you can, utility that you consume. If you generate $1,000 worth of utility for other people a week and you consume $800 worth of utility yourself, your wealth grows by 20%, and that 20% of its invested wealth grows compounded. That's the way it's always worked. It's the way it's always going to work. Despite the fact that many of us wish that life would be more generous with us. It's not going to be. And before you worry too much about what Mr. Trudeau is going to do to you, or worry too much about what Mr. Biden is going to do to you, I think you need to worry about what you are doing to you. I've learned in my life that the greatest risk that I'm exposed to is to the left of my right ear and to the right of my left ear. In other words, my own volition is a more important determinant of outcomes for me than every single externality I'm faced with.
Oh, that is a great thought to end this interview on, and some amazing sound bites there. Rick, thanks so much for taking the time to hop on here. It's always a pleasure to get to speak with you and learn from you. And I hope you'll continue to come back on and chat with us, because we really get a kick out of it.
I look forward to it. We should, at some point in time, we should probably do investing again. I'm not, I don't think of myself as a philosopher, but anyway, it was fun.
Awesome. Well, thanks so much, Rick.
Thank you.